A very good morning to everyone here today. So today I'll be doing a presentation on my journey throughout this National Investment Challenge. So before I begin, I'd like to do a quick introduction of myself. My name is Zichuan and I'm currently on my final semester in Ngee Poly. So moving on. So how did I go about choosing what kind of stocks I would like to trade? So after doing much research, I decided to only trade within the US market instead of the SGX market based on three main factors. So firstly, volatility. There are larger buying and selling volumes within the US market compared to the SGX market. So this leads to my second point. This creates more opportunities for me to execute my trades on to catch larger price movements. So thirdly, navigability. So on the right is my watch list for majority of the challenge. So personally, I felt that it's easier for me to navigate through the news that I get from these US stocks from major media outlets such as Bloomberg, investing.com, etc., compared to Singapore stocks. Moving on to my next slide. So now I'll be talking about my strategies. So my first strategy is news trading. So during the challenge period, I was able to catch the consumer price index data, which lets you know about how the rate of inflation is going, how well they are fighting it, on the 13th October and the 10th of November. So we also have the FOMC meeting. So this is where you listen to the Fed Jerome Powell, whether he's leaning more towards a hawkish or dovish stance, because this will determine how you trade the market within the next few weeks. And then we have company earnings, whether it's going to be positive or negative, and sector-related news, for example, if I'm trading Tesla, right, I will actively look at whatever Elon Musk does, because what he does has an indirect impact on Tesla in a sense. And as for cryptocurrencies, Coinbase stock in the US market is the stock that is directly affected by whatever happens within the cryptocurrency space with the exchanges. So that's another thing that I look out for. My second strategy is technical analysis. So I have the 20-day and the 100-day moving average, the RSI to gauge where the overbought and oversold areas are, and my Fibonacci retracement tool, which I use for my entries and exit, and the MACD, which is the moving average convergence divergence, to determine the trend of the market at a point of time. My third strategy and my main strategy is price action. So firstly, I will find out what my market bias is first. So by drawing a basic trend line, if you are bullish or bearish, you enter longs or short. So on the right, you can see that's the chart of the S&P 500, right? That's the daily chart. So by simply drawing a trend line, you know that we are in a bearish condition. And then I also look out for key levels, where do the previous high and low reside, supply and demand zones, and support and resistance areas. And my last key factor is imbalances. So this is where liquidity lies. It's the gap between the first candle over here and the third candle over here. So it's a theory that the price will always come back to fill a gap of liquidity before it goes to whichever direction it wants to. So all three of my strategy is combined together to find enough confluences before I execute on any trade. So I don't rely on a single strategy. So as for my risk management for this strategy challenge, so I come into this investment challenge knowing that I'm not going to beat the market. So I found a favorable risk to reward model that will favor me. So I'll only execute trades that returns me 2 to 1 or 3 to 1. And my loss per trade is about 1 to 2%. And if I'm extra confident, I have a maximum loss of 5%. And just an illustration, if you execute trades that returns you 3 to 1 risk to reward, if you have a $10,000 capital, you take 6 trades, 4 of those were losses and 2 of those were winnings, you still end up profitable with a win rate of 33.33%. So you end up with a $200 profit. So this is the mindset that I have going into this challenge, knowing that I'm probably going to lose more than I win. So moving on to some examples of the trades that I took. So this is an Apple 15-minute chart. So you can see my first confluence is a news trade. So non-farm payrolls came out and the market opened lower. So that's my first confirmation that I should probably go for a short trade today. My second indicator is my 20-day moving average crossed down into the 100-day moving average. That's my second confluence that it's not a good day to go for long. So I was actively looking for short opportunities. And my third indicator is my MACD going below the zero line and the larger selling volume. So I managed to enter into a short trade with a risk to reward ratio of 2.38. And moving on to another example, this is an example of how I use my Fibonacci retracement tool to enter into a trade. So on the left, you can see that's the chart before the price played out. So I identified a short-term uptrend and I drew my Fibonacci retracement tool level from the previous low to the previous high. And this yellow box over here is where I would like the price to come back to for me to get an optimum entry. On the right, you can see that the price ended up coming back to these levels. So I entered a limit order over here and the price got filled over here. So I managed to catch this trade for 1.65 RR. So as for this trade, this was one of the first few trades that I took for this challenge. So I think when I see a little bit of profits, I was too emotional and I would want to secure the profits. So I didn't follow my risk management and I only secured it for 1.65 risk to reward. Another example, so this is a Coinbase 3 minutes chart. So the first confluence is when I looked at the stock at the opening, the RSI was very overbought. So the stock was very overbought and the price immediately went down. So I could have just did a market short, but I don't have enough confirmation yet, right? So second, I spotted an imbalance which is the gap between these two candles. So this gap over here, and I entered a limit order. So the price came back up to fill my order before going back down. So this huge momentum candle confirms my confluence. And then initially I had my take profit at about this level, but I had an additional confluence, which is that my 20-day moving average crossed down into my 100-day moving average. So I moved my take profit lower and I ended up getting this trade for 2.89 risk to reward. So the best trade setup that I took of this entire challenge, I feel, is because I have notifications on for majority of the media outlets. So I received this notification that FTX filed for Chapter 11s. So initially I didn't know what it was. So it's actually a bankruptcy statement. So I immediately went to look at Coinbase since it's a sector-related stock, right? And the price was very choppy, so I didn't trade it at first. But towards the end, the price was rallying. So I felt that the rally would stop because retail probably thinks that it's good for Coinbase having one less competitor. But when more FUD builds, which is fear, uncertainty, and doubt, people actually fear that Coinbase might end up like FTX. So I entered a limit order before the market closed for the weekends, a short position with a minimal stop loss. And then over the weekends, there were indeed a lot of FUD that built up about Coinbase having a possibility to end up like FTX. So I managed to gain $490 on this trade, which is a 6% drop in price that I ended up gaining. So the worst trade that I took was for Tesla, that I lost 2%. So this trade was the worst because I was not able to control, again, my emotions. Because before this trade, I had a streak of losing trades of about 3 to 4. So I just wanted to have a winning trade, even if it means like $20. So I ended up taking a long here with zero confirmation at all. So this trade was one of the worst trades that I took of this challenge because I was not able to control my emotions and that I had zero confirmation at all. So my biggest gain throughout this entire challenge is Palantir with a gain of $1,320. So this was a limit short order that I entered over here with a minimal risk. So I ended up gaining 5.83 risk to reward. So the first confirmation is Palantir had 3 bad past earnings. And second, all the major FAANG companies such as Microsoft, Meta, Amazon all had bad earnings before Palantir released theirs. And Palantir itself is a software company, so I didn't think that they would outperform the major other companies. And my third confirmation is the macro conditions for Q3 of 2022 was one of the worst of 2022. So I ended up taking a short position which gained me this amount. So my biggest loss is because I didn't follow my risk management again. So initially I had a stop loss of about over here, but the price kept going up when I entered a short order. So I refused to take a loss because I believed that I was going to be right. So I kept moving my stop loss higher, which ended up having me take the biggest loss of my challenge, which was $374. So in summary, I took 40 trades, 20 of those were losses and 20 of those were winnings. So I have had an average win rate of about 50%. So my end capital was $8,031.87, which is a 60.6% gain from the initial capital that we had. So in summary, I think the main key takeaways that I have for this entire challenge is going through psychology barriers. Firstly, we have emotional bias, fear, greed, and hope. So when I first started trading on the first few weeks, and when I entered a trade that followed the strategy that I planned out, when I see a little bit of profits, I fear that the profits might be gone. So I just take the minimal profits. And when the price ended up hitting my take profit level, I was greedy because I thought to myself, oh, I could have gotten this amount of profits. So I entered for another trade immediately right there, which ended up in a loss. So that's for the emotional bias part. For anchoring bias, I think for this entire challenge, Tesla stock I traded a lot of it, and I think I'm overall down for it because I'm too anchored to the price of Tesla in a sense that I don't believe that it will keep dropping. So because I'm too anchored to a single information, which is the price of Tesla, I refuse to take in new information about Tesla that might affect it. So at every key support level, I would long Tesla, which ended up in a loss. And lastly, loss aversion, which is the example that I gave previously, which is the Apple, which is my biggest loss. I refuse to follow my stop loss levels, and I hold on to the trade for too long that my loss gets too large, and ended up I take a larger loss than I wanted to, not obeying my risk management strategies. So all in all, I think this challenge has been super insightful, and especially for a beginner to stock trading. And thank you guys for listening to my presentation.
So Zhichuan, I'm curious, right? You seem to be very self-aware about your little psychological pitfalls that cause you to maybe let your losses run and not your profits. What have you learned from beyond self-awareness, and what will you do different if you did it again?
I think it's important to put your emotions aside when I'm trading. So I think what I will do differently is maybe if I execute a trade, I would not go back and look at it. So I'll just let it play out first, because I tend to have the tendency to keep looking at the price every 5 minutes or so when I shouldn't have to. So I think that's something I would do differently, which is just let my chart play out and then come back and look after it again. Yeah, instead of always every minute looking at the chart, which there's no use to it, because it will just make you more emotional wherever the price moves.
Is it helpful to have something more systematized?
I think yes, definitely. If you have a systematic system that will just play out whatever strategy that you have, because there's no emotions in that, right? So you just let the system take over your trade and have no emotions.
Can you go back to the slide on your watch list again? The very first slide, I believe. Okay, so your watch list, you created the watch list at the start of the competition.
Not really. At the start, I think I didn't really understand what or which stock I should probably trade. So I think I just listed a major like Apple, Tesla, S&P, and Coinbase. That's all. But further on the challenge, I continued adding more stocks to it.
Were there certain criteria other than volatility opportunities? This volatility opportunity is quite a big term. Do you have empirical, statistical figures that you add into your selection, like volume or earnings, stuff like that?
Yeah. Okay. So initially, I had S&P 500 and Apple, right? So when it came to earnings season, which is around November, and I found out that there was actually a lot of volatility coming into the stock because earnings season is coming. So I started adding like stocks like Palantir, Microsoft, Amazon, because they are sort of in the same big tech group. So I added them because there was more volatility coming within this sector alone. So yeah, probably because of the earnings season that is coming, that's why I added such stock during the middle of the challenge.
Okay.
So you added stock based on the names that you know, or is there an approach?
Yeah, so such stocks, so such stocks are kind of indirectly affecting each other because they are within the same stock. So that's how I went about choosing the stock that affects each other. Yeah, so it's that they have an indirect relationship in a sense.
How much do you How much do you look at the company fundamentals, the financial ratios and the?
I don't think I looked into the financials quite a lot because I'm more of a price action trader. So whatever is the market trend at the moment, I would trade that.
Other than that, I think that your approach is actually quite holistic. Other than that,
Curiosity, why did you choose the name Alameda?
Before this, I looked up to the prop trading firm a lot because of how I think they came up quite big, right, in a short span of time. So I admired the way they trade, of course, and things didn't pan out for them. But yeah, yeah.
Maybe just one question from you. So you seem to only focus on US stock, and you mentioned earlier it's because of lack of research. Is that the only reason why you didn't look at Singapore stocks?
Lack of research. I think I mentioned that I prefer to trade a market when there are more price movements, because my strategy, if I'm too limited to because my strategy alone for Singapore Stock Exchange, the volume is to me, I feel it's low. When I can trade US market where I have more options of stocks to be able to trade on, my strategy, so I don't only have to look at 5 stocks where my strategy play out. I can have other stocks that qualify for my confluences enough for me to trade on. So I personally felt that SGX market didn't give me that. And I think at the beginning when I did the demo trading for a bit, I took a look at the SGX market and I tried for a bit, and it didn't work out for my strategy. So I ended up just going to focus on one market alone. So I have more focus as well.
So it's the volatility that's
That's
more
important.
versus the volume. Yeah. Volume is secondary. It's more your strategy works better, higher volatility momentums.
When there are more buying and selling volumes, there are larger price movements. So it's kind of
So you can look at your imbalances.
yeah.
Thank you.
All right. Thank you guys.